pops up every time. Make sure we're live.
Okay.
We're here.
Yeah, Goldfinger Group started a live video.
That's
We are back. We took a little hiatus.
I think I took the hiatus.
Max took the hiatus. I took the low-hiatus. And now we're back.
Right.
We're back in action. We are excited to be back with you guys to do this Instagram Live and tell you about a property we recently sold. So we bought a property in Santa Monica in December, so it was almost 7 months.
Mm-hmm.
And we sold it a couple of weeks ago. We returned a nice return to our investors, and we're here to talk to you about it. So there was, before we send out like an email to everyone about the Instagram Live, we normally will put a subject line. We weren't really sure what to call this, what to write on the email, just because it's kind of like a conflicting subject. So to kind of like illustrate that, I will read out some of the, or Max will read out.
I don't advocate for any of these. These are all you, so I'll let you take the cake.
I'll take the cake, and I will tell you guys what kind of a bunch of subject lines that we were thinking about calling this Instagram Live. So let's go. One is called "We Have Some Good News and Some Bad News." They're not all screamers. Oops, we did it again. How to deal with losers. When to fold them. When life gives you lemons. Or another great TGG performance. And the last one was we made our investors a 26% annualized return. So, the truth is that there's clearly this conflicting perspective. And this is why we want to, there's a lot of properties we buy and sell, but this is an interesting deal for us because of how everything played out. Mm-hmm. And we're here to just kind of show you all the perspectives and the things that we learned from this transaction.
Yeah, and I think what you're saying is here's a deal that didn't quite go to plan, but we found a way to perform for our investors. And I think that's what makes me so happy about why I show up every day and why I put in all the time that I do, is because I care so much about performing for our investors. And why is that? Is because they're giving us their money to buy these assets because they don't have the time, the energy, the knowledge to do it because they're so focused on other aspects of their life and their career. So they're really entrusting us to do this, and I love performing for them, and I love going back to them and saying, hey, this is how it went down, this is how we executed, and this is where we're at and why we did it. And like you said, we were so conflicted because here was a great asset. We bought it in December of last year. Mm-hmm. 16,000 square foot lot in Santa Monica. I mean, land like that does not exist in Santa Monica.
For the price that we got it for.
Exactly. And we set out with a business plan in mind to do a certain type of construction. And once we got into the property, it definitely shifted, and we found a way to still create value for the investors, right? Utilize the land that's there. And with recent California laws that passed where we can build out ADUs, add additional units, take it from 7 units to 9 units, it was a no-brainer. And we look at the construction cost of building an ADU. I know we spent a whole Instagram Live talking about ADUs. It's I can build out a unit for $75,000 to $100,000, and the price per door on the market's $300 to $400 or $500. You're doubling, tripling your money just by adding these units on that particular unit. So we were able to shift our business plan and still find a way to add value to the property. And a lot of this, what we do is we spend so much time on asset management figuring out how can we execute this deal, what are ways that we can do it, and we established a pretty firm business plan, had a contractor lined up, we had plans ready to go to submit to the city, and then all of a sudden we found somebody who was willing to take the property as is, where we could still exit and make that 26% annualized return for the investor.
Yeah, so essentially we ran into some hurdles that we knew that we may have some hurdles in our due diligence, but I don't think, we budgeted to overcome the hurdles, but without getting into too much detail, we had some roadblocks and we had to make a decision. Do we make the most out of this property? Do we take it a distance? Or do we make less money but make it sooner and trade the funds into another property that we can execute an entire business plan? So every property is different, and you do as much due diligence as you can. And what we always talk about is looking at worst case scenario, right? Looking at the worst case scenario of if the worst thing happens, where are we going to be? Are we going to at least be able to break even? And here I wouldn't say the worst thing happened, right? Because we were still able to find ways to create value, right? Like we created 6 parking spots, which I know that a lot of people say like, oh, 6 parking spots, who cares? Like 6 people can park their cars. But if you look at it, 6 parking spots in Santa Monica is conservatively speaking $100 a month per spot. That's $600 a month. Times 12 months is $7,200 a year. That's about $100,000 in value creation, and it costs us a couple grand to chop down those trees. Actually, Max and I went out there together and we just
Paul Bunyan over here.
Yeah, exactly. So, but yeah, it costs us a few $1,000s to create those parking spots, and it was $100,000 of value. And then we also we're planning on building out a couple of ADUs, which is going to add value. So we definitely had some alternative strategies that were lined up.
Exactly.
But with that being said, we found a buyer who had a higher and better use for the property, and we were able to flip it to him for about $500,000, more than $500,000 more than what we paid for it, 6-7 months prior. And we felt like this is a good opportunity to take the chips off the table and move the equity, move the investment dollars into another project where we can really take it the distance.
Exactly, and I think kind of what you're saying is we were also motivated because we have properties that we're looking at now that we're actually under contract on now that are good uplegs, that we see an executable business plan that we feel comfortable performing on, same style of asset, same great locations that we're really excited about. And for us, like, it's all about downside, right? So we bought the property, interesting enough, in a bridge loan, in a construction loan, with a vacant house. We were cash flow positive like 4% a year. So we were really stable in the asset. But like you said, like, we can get out, we can perform for our investors and find properties that we can really do the TGG model that we're really excited about. And I know you were a little bit of like, hey, like, we can make more money on the back end if we do the full project, and I was a little bit more of, let's take the deal, let's move forward. And I think you and I really came together well in order to get this done.
It ended in a wrestling match. Max won.
That's because I had Kaya to help
That's
out.
That's true.
Tag team with the dog.
Yeah,
So
we definitely went back and forth, and it's important to go back and forth and to disagree, because if you're always agreeing, it means that either one person's too agreeable or there's telepathic shit happening or whatever. But you gotta understand the other person's perspective, and I gotta say that my initial gut feeling was like, we're leaving money on the table, right? Like, we could really do more with this. But when Max really ran the numbers and showed me the calculus on the spreadsheet showing, hey, the IRR, given that we're getting out in half a year, right, even though we're making significantly less money, but to do it in 6 months, plus we have a bunch of projects that we'd like to put the money into, and the fact that there's something called like non-extractable upside, meaning there's a lot of upside in the property that we're never going to be able to see. So like, as great as it is for us to know that there's upside in the property, it doesn't really help us from a return investment standpoint. However, the person that we sold the property to is a longer term holder, and he's going, okay, I don't care if I'm able to see the upside today, I care about 10, 20 years down the line.
Exactly. And I think this is a perfect example of a deal that when we bought it, we knew we were buying it right. And that's like the big thing for us and our investments. And when I talk to potential investors, is like, we're always buying right, meaning we have day one cash flow, right? We're not buying these properties where we're negatively leveraged or gonna have to pump so much money into the property to own it. And worst case, we could most likely go out and sell it, definitely return the money in a worst case scenario, and hopefully achieve the returns that we're achieving in a worst case scenario. And I think this is just a prime example of we're out there finding the right deals, the right locations, where we're protecting our downside.
Right, and I just want to touch on, I think, just one more thing, but maybe there'll be more, but for now, just one more thing. The buyer that Maxx identified was someone who was an owner user who was going to be moving into the property, and that person has a higher and better use. Some people may be asking, well, how did you sell it for so much more so quickly? And there's a couple reasons. One of them is identifying someone who has a higher and better use for the property. Right, so when you look at a property, you have to say, okay, what is the highest and best use for us? But then what is also the highest and best use for someone else out there in the marketplace? So an owner user is generally they're going to pay more because they are going to not just have the property as an investment, but also as a place to live. Mm-hmm. So that was one reason we were able to get a higher price. Number two is because we did add value by chopping down those trees, adding those parking spots. Which again, 6 parking spots worth about $100,000 in Santa Monica. And the other reason is because we bought it in December, which was pre-vaccine rollout, and we sold it in June, was it a couple weeks ago, right? So,
and we closed in 14 days when we bought it. So I think like a lot of, the reason why we got it at the price we got it is a lot of things that we did in order to close in December. And the other value we brought is we had ADU plans ready to go for 2 ADUs, which then the buyer can then decide, or now the owner can decide his plan moving forward on the property. And that's, ADU plans cost a lot of money and takes a lot of time with the contractor. So I think that was like a big selling point.
Yeah, so unless you have anything else to add, I'll just go through the titles again. Oops.
Why don't you pick your favorite one?
I mean, like, oops, we did it again is great. But it's true, like all these things, it's like we have some good news and some bad news. Like the bad news was we weren't able to complete the plan, the investment plan as we had thought we'd be able to. But the good news is that we were able to return 13% or approximately 13% in 6 months, which is a 26% annualized return. Mm-hmm. They're not all screamers, even if they look like even if it looks like it could be a great deal, if you're not able to extract the upside from the deal, it could look great on paper, but if you're not able to execute a business plan, then looks are,
exactly.
Just part of the deal. How to deal with losers. So not every property is going to be not every deal is going to be the best deal. You can't expect every deal to be a home run. This wasn't a loser. It just wasn't, it wasn't a grand slam. It was probably a double, right?
With an RBI. That's what we established.
With an RBI. Okay. Double with an RBI.
Take it
when life gives you lemons, okay, when to fold them. I gotta say, these are all great names.
Is this what you spend all day doing? Is coming out?
When I go across the hall, you know what I'm doing. Okay. The bathroom's across the hall. We made our investors, a return and another great TGG performance. I think ultimately these are all great titles, but it was another great TGG performance. Hopefully this Instagram Live was a great performance for you as well. If there's any way that we can add value to you, please feel free to reach out at Elijah Kropkin, at the Goldfinger Group. If you have a deal, if you're looking to invest, we'd love to hear from you. If you just want to say hi, if we have the time to respond, which I'm sure we'll find the time to respond to you guys.
Outside of your titles.
Yeah, outside of picking titles for the next Instagram Live, maybe we have some time to talk to you. And we look forward to hearing from you all. All the best until next time.
Thanks.
Hopefully he's not going to be in New York in 2 weeks. We'll be able to do this in 2 weeks.
Exactly. Back on
Adios.
schedule.